All right. Hello and welcome to the Stock Operator channel. My name is Alex, and today we're going to go over the beginning of the week market update with the portfolio review and just some interesting things I'm noticing in the market. If that's what you're into, stick around. All right. So this is the QQQ. Ticker symbol, yeah, QQQ. So as you can see right here, I put a target in here from 2018. I think it was roughly 4.5% from the 252-day moving average, and it looks like we hit it today. We hit it. We reversed, did one of these kind of spring Wyckoff springs, and it's looking pretty decent so far. So looking like we could bounce perhaps the rest of the week, or maybe, tomorrow we test it one more time down here. But we should definitely try to get above this level right here, because, if we don't, that would spell a major retest. But so far, so good. So let's dig into what the market monitor is talking about. Okay. All right. So here's what we got. If you take a look here, I mean, a big pickup in stage 2 stocks. So we're bullish again on the stage 2 stocks. Still, bearish in stage 4, but not so bad. If we take a look here, let me see here. Yeah, I mean, we're finally getting a pickup in the 20% bearish, which is getting towards into that oversold level, which is something you want to see for a bounce. Less lower lows. Almost 700 stocks in the bullish combo, which means 700 stocks are finishing at the highs today, which is for a reversal candle is something a little bit normal. I mean, if continuing onwards, we're still accelerating on the short-term momentum down, but some stocks will probably likely bounce now, the strongest ones, and then this number will go down, and you try to front run that number. So that's good side there. So that's about it for the market update. Let's take a look at the portfolio, how much we've gotten hit this week. So portfolio's down. I mean, I think last time I was at 101 or 100. So portfolio's down about 4%. And I wanted to go in and kind of talk about a couple of these stocks today. Just let you guys know why I picked it, what I'm doing. Some things I actually did start adding some new positions today. I could tell you guys about those new positions, but why don't we go ahead and do that? So today what I did was I trimmed a little bit of this Chinese Crane Shares ETF. I also trimmed a little bit of my cash position, which is this CLO ETF. And with those funds, I went ahead and bought Baidu. I know it wasn't in the list up here, but it was semi in the list, like a LI sort of a thing, a Beely sort of a thing. I could have picked Beely, but I just like the options pricing in Baidu, versus those other options, because I didn't want to change the portfolio at all. I just wanted to add one little kind of high beta element to the portfolio down here at lows, just to give it a little bit more juice. And Baidu's looking, if we look here, it's a nice little cup with this sign of strength in here. And it's been lagging BABA, but if this thing gets out of here, I think it could move pretty fast. So that's what I did. I took a 1% position in leaps. So I bought the January leaps. Yeah, and in this account, I typically like to go in the money, but to get that 1% position, I think it was around $2,000 to buy the 85s or the 90s. So I had to buy the 110s for January. So that's the update there. Maybe we could go over some of the stocks that I'm long right now. So let's go back to the portfolio. let's go over some of this stuff I have in the technology portion of the portfolio. Just to tell you what I'm doing, like why I'm invested in these, and yeah, just how they're doing. So we have this stock here, Tiger, which is another Chinese name, because I mean, emerging markets have been hot. Everybody knows that. And it's kind of just doing the same thing as Baidu. You know, it's creating this sort of a cup here, and it's getting ready to go. So I like this stock. And if you look at it long term, you know, I mean, this stock makes big moves when it gets going, and there's a lot of volume here, and it's just taking some time to dig through it. So we got this going on, right? This looks like a nice setup, and it's almost ready to go. So that's kind of why I'm long this. Instead of this Futu, which is a larger cap stock, same industry group, it is kind of a little stronger, but it's a little bit less explosive. And with this account, you know, it's only a 100K account. You know, you want to get some bang for your buck here. So that's what's going on with that. Yeah, let's see here. Let's go back to the portfolio. Yeah, so, you know, that's just kind of what we're looking at here. Yeah, if we click, I mean, what else? Yeah, maybe I could go over these MBS stocks. So what, I mean, basically, what are these MBS stocks? They're basically levered mortgage REITs. So if we take a look at, let's say, a DX, this is a levered mortgage REIT. And what's interesting with these is, you know, typically these things are just in downtrends and they're going down because they yield about 15%. And they kind of suck out the yield over time. But what I've noticed with some of these MBS stocks is that whenever you get an inverted yield curve and the curve reinverts, I mean, basically what these guys do is they borrow short and they buy long. So, you know, when that yield curve is de-inverts, these guys can get actually go up in value, the price of the asset, and get the yield. Now, this is unfortunate. Like recently I'm watching, because I think I bought around here and it was a nice move. I mean, 15% plus the 15% yield. We've come down from there, but I'm thinking, you know, this thing's just going to back test this top end of this range and potentially keep going, unless, like, you know, the economy starts to go and we lose out. And then, you know, I diversified myself and bought all of them. So this AGNC, I think I bought it right here. And this NLY, which I think I got at the same spot. So, you know, these all make nice moves when I entered, and they all look pretty much the same. This just had its dividend today. It's actually not down that much. You know, what did it give out? It gave out a 4% dividend today, and then it was up on the day. So that's a really nice, I think, 5-6% move in that stock to the upside. Yeah, so those are, you know, I'm thinking, you know, they could at least maybe go up, you know, back to their highs and hang out there, and then continue to pay that 15% yield. I think it should be a good part for the portfolio. What else? We got some BDCs in here. So BDCs are basically just business development companies. Essentially, they're giving loans to smaller companies. Yeah, it's just a way to invest in loans in the private market. So I got a couple of them. I diversified myself with that 4% position between a few of them. So one of them's ARCC, another's Main Street Capital, another one is OBDC, and FSK. And let's take a look at the charts. So if we look at ARCC, I mean, this thing had been acting pretty well. You know, it's going up. It pays I think 8 or 9% yield. You know, when I started this portfolio, I think I was buying in around here, like throughout this whole thing. So I think we're flat on it. But we've got that dividend. So, you know, it's just, I think it's just going to go sideways from here and pay an 8 to 9% dividend. FSK, I think we did okay on this one. I think we were buying in around here, and we got like a dividend here, or maybe right here. So it's the same thing. I think we're down on it, and but it's paying what, 13%, I think this one's paying. So that one's pretty decent. And OBDC, I think we got another dividend on this one. And I think we were buying in around here. So it's, you know, these BDCs are basically just a better way to get a little bit more yield, and they just go sideways and pay, anywhere from 9 to 13%. So that's about it, guys. I think that's good enough for today. Good enough for the portfolio review and for the Monday market update. So yeah, I think this is low volume, so I think we're gonna if it's bullish, we're gonna continue, and we're gonna continue very quickly. Given the Trump tariff fears, I think we could bounce here. And then, similar to 2018, like I was talking about, we'd bounce back up to here and then potentially go down again. That would be the bear case. Because I think before we have a major crash, we have to test this quarterly moving average one more time. That's typically what happens, unless it's a crash. But we're gonna, go up, and this moving average will meet us over here. We test it one more time, and then we'll see what happens. All right, guys. Well, if you like that content, feel free to comment down below on how bad my portfolio is, and how whatever you guys would do to do it better. That'd be fantastic. Like and subscribe. And I appreciate you guys coming here, and thank you so much. Have a great day.